In 1944, one currency quietly rose above
all others and placed itself at the center of the modern world. It was not chosen by ordinary people trying to
rebuild their lives. It was not
elevated by democratic consensus. It did not
earn its status through moral leadership or shared prosperity. It
was engineered in a moment of global fear, exhaustion,
and desperation for stability for more than 8 decades. The United States dollar has shaped the architecture of global power. It decided which nations could borrow,
which governments could survive, which economies could grow,
and which would stagnate under pressure. It priced oil, coordinated trade routes, fueled reconstruction, underwrote wars,
and stabilized fragile systems on the verge of collapse, from New York's financial skyline to remote villages trading goods in developing nations. The dollar became more than money. It became authority. It became legitimacy. It
became the invisible operating system of the world economy. Generations grew up believing the dollar was
permanent. They believed its value, power, and stability were beyond question. Global institutions, pension systems, sovereign reserves, and multinational corporations all depended on it. Entire nations tied their survival to its consistency. But now, in 2025, a question whispers through central banks, intelligence agencies, hedge funds, and closed-door summits. Is the dollar losing its power? Not collapsing spectacularly, not disintegrating overnight, not vanishing into chaos, but slowly, systematically, structurally being
weakened by a world that no longer feels secure,
entrusting its future to a single monetary empire. History
teaches a disturbing lesson: the most dangerous transformations do not arrive loudly, they unfold silently while everything still appears normal and beneath the
surface of calm markets and reassuring news cycles. The global order of money is already shifting. You understand the dollar's uncertain position in 2025.
We must return to the moment its dominance was engineered. In 1944, as World War II neared its conclusion, leaders from 44 nations gathered in Bretton Woods, New Hampshire. Officially, the mission was stability. Unofficially, they were constructing a hierarchy of power that would define the next century. The United States emerged from the war economically intact, militarily dominant, and industrially unrivaled. Europe lay in ruins. Asia struggled to recover. The world needed structure, and America offered a framework at a price. The Bretton Woods Agreement positioned the US dollar
as the world's reserve currency, exchangeable for gold at a fixed rate of
$35 per ounce. All major currencies would tie themselves to the dollar, making it the central pillar of global liquidity and trade. This was not cooperation. It was centralization of power. From this moment onward, the world's financial blood flowed through one artery. Nations needed dollars to trade. Banks needed dollars to function. Stability
itself was measured in American currency. Then came
1971. President Richard Nixon severed the dollar from gold,
transforming it into the world's first fully dominant fiat currency. Money was no longer backed by metal, but by confidence,
military presence, and geopolitical influence. This
decision reshaped economics forever. The dollar became less tangible, but more powerful. It
became a currency sustained not by substance, but by belief. For
decades after the Nixon shock, the dollar appeared untouchable. Oil
was priced exclusively in US dollars. Global
trade pipelines relied on it. Emerging economies stored it as protection. Foreign governments financed
American debt in exchange for stability. The petrodollar system ensured permanent demand,
locking the world into an invisible dependency. The United States gained a privilege unprecedented in history. It had the ability to issue the currency the rest of the world depended on. It could print, borrow, and expand without immediate consequence. It
could export inflation while retaining global authority. But every empire mistakes
dominance for immortality. Debt ballooned. Financial complexity masked fragility. Real economic productivity slowed while monetary expansion
accelerated. Paper wealth eclipsed tangible value. Then came the year 2008,
a crisis born from internal excess rather than external
threat. Banks collapsed, credit froze, trust shattered. The very system designed to safeguard prosperity nearly
destroyed the global economy. The response was
extraordinary intervention. Trillions
were printed, interest rates were suppressed, markets
were artificially stabilized. The patient survived,
but the medicine weakened transparency and trust. Power maintained through constant manipulation cannot remain unchallenged forever.
By 2025, The challenge to the dollar is no longer emotional. It is strategic. It is methodical. It is deliberate. Central banks across Asia,
the Middle East, and South America are quietly
diversifying reserves. Gold accumulation has accelerated dramatically. Energy
contracts now settle in alternative currencies. Bilateral trade arrangements bypass the dollar entirely. China promotes the yuan internationally with long-term intent. Russia restructures its reserves in anticipation of future
sanctions. BRICS nations explore parallel trade
systems to reduce Western leverage. Emerging economies redistribute
exposure to lower systemic risk. This is not defiance. It is calculated risk management. The world is no longer abandoning the dollar. It
is reducing its dependence on it, and reduced dependence equals reduced power. Every percentage point shifted away represents a weakening of the dollar's grip on global
liquidity. The era of unipolar
monetary dominance is fading. The world now
operates under a multipolar financial system. The dollar, the euro, the yuan, regional trade blocs, and digital frameworks now compete for influence. This
fragmentation dilutes predictability. It introduces uncertainty. It transforms stability from
universal to conditional. The dollar remains
influential, but it is no longer absolute. Empires do not fall in spectacle. They
unravel through fatigue,
overreach, and erosion of
belief. Rising sovereign debt strains systems.
Silently, political gridlock restricts reform. Demographic pressure compounds instability. Expansion outpaces reality. Promise
exceeds performance. Confidence
weakens gradually. Decline reveals itself not
through explosions, but through gradual detachment from trust. When monetary supremacy weakens, its effects reach everyday life. Inflation erodes. Savings, purchasing power shrinks. Retirement stability weakens. Costs rise faster than income. Fear
normalizes. The middle class absorbs this pressure in silence. Financial elites adapt faster. Inequality deepens.
The dollar is not disappearing. It is evolving. Its role shifts from uncontested
monarch to powerful competitor. The
world restructures itself around diversification rather than
submission. China's currency strategy
demonstrates long-term foresight. The Middle East diversifies reserves aggressively. Eastern Europe reshapes monetary alliances. Nations hedge exposure, seek redundancy, and protect sovereignty through independence. Every global currency follows a predictable
arc: birth, trust, dominance, overreach, transformation. Gold ruled empires. Silver-shaped expansion. The dollar governed the modern world, and now history prepares its next
chapter. The most dangerous moment is not collapse. It is unnoticed change. The question is not if the dollar is losing power, but whether the world will see it before the transformation becomes irreversible. And yet, beyond headlines and political speeches,
another layer of reality continues to unfold in silence. Global investors are already adjusting portfolios
to reflect an era of uncertain reserve
dominance. Sovereign wealth funds quietly rebalance
exposure away from excessive dollar concentration. Major trade corridors
experiment with alternative settlement frameworks to reduce future
dependency. Central banking strategy
is no longer built on loyalty, but on survivability. Behind closed doors,
financial models simulate a world where the dollar no longer anchors everything. Economists debate scenarios once
considered impossible within mainstream financial doctrine. Risk managers now calculate exposure not only to markets,
but to currency power itself. Private capital moves ahead of public awareness. Institutional foresight outpaces political reassurance. Corporations
hedge logistics against disruptions tied to dollar volatility. Energy contracts quietly adopt
flexible currency terms for long-term stability. Shipping routes adjust pricing mechanisms in anticipation of global monetary transition. What once felt unimaginable begins to look inevitable under careful observation. Confidence
shifts from certainty to resilience. Security
redefines itself through adaptability. The world no longer assumes
permanence in any financial structure. Long-term planning replaces blind
faith in inherited systems. Old alliances are renegotiated
under new monetary expectations. Financial
influence migrates toward
emerging centers of economic gravity. Strategic patience replaces immediate dominance. Negotiation replaces assumption, and calculation replaces emotional loyalty. This transformation does not require collapse to be
Effective.it only requires time and silent
consensus. The global economy is not ending. It is evolving into something more complex, less predictable,
and more fragmented. The certainties of the 20th century dissolve under modern pressures, new paradigms form while the old one still appears functional, and for those watching closely,
the message becomes unmistakable. The era of singular monetary authority is fading. The next structure will not ask for permission. It will simply emerge, layer by layer, decision by decision,
transaction by transaction, and when the world finally acknowledges the shift, it will already be complete.